Coming up on the show today, South Africa's inflation quickens to 7-month high at 4.5%. Egypt to resume IPOs of state-run firms by end of March. And World Bank approves $2.2 billion for projects in Nigeria. Thank you for joining us and welcome to Business Incorporated. I'm Chimeze Obi Iwago. We begin the show with major markets in Africa which were mostly positive at intraday. The JSE index in South Africa gained 0.24% despite data showing higher inflation rate. In Nigeria, the index gained marginally by 0.01%. The EGX 30 also posted gains of 0.7% at intraday. Kenya closed negative on Tuesday. And most major Gulf stock markets traded in positive territory at intraday, led by financial stocks and corporate announcements. But Dubai's index retreated on a sell-off by blue chips. In Qatar, the index added 1.05%, with Qatar International Islamic Bank advancing 2.3%, and Industries Qatar was up 1%. Saudi Arabia's benchmark index rose 0.94%, driven by a 1.1% gain in Saudi Basic Industries and a 0.3% rise in Saudi Aramco. The Abu Dhabi index edged up 0.36% as First Abu Dhabi Bank was up 0.3%. Dubai's main share index lost 0.77%. Emirates MBD Bank eased 0.4%, and Emirates Integrated in Telecommunications was down 0.5%. And in Europe, stocks advanced this morning as investors continued to monitor the spread of the new coronavirus and fresh economic data. Let's cross over now to Frankfurt Stock Exchange, where my colleague Conrad Wilson is standing by to tell us all about that. Hello, Conrad. Good afternoon. Good to see you.
Good afternoon, Jimmy. Good to see you too. Thanks for having me back on Channels TV.
You're welcome. Well, European stock traders keep discussing the potential economic fallout from the COVID-19 as coronavirus. And in the meantime, the euro has fallen to the lowest level towards the US dollar in nearly 3 years. Any message there for economists?
Yes, there is a connection there. You know, this has to do with the coronavirus and the standstill of the Chinese economy. The longer this goes, the longer European companies, and of course especially German companies, German manufacturers that have very integrated production lines with China, the longer this goes in China, the standstill there, the bigger the problem for the German manufacturers will be. And this has an effect on the euro because, you know, America, the economy there is less dependent on China. It's more of a self-sufficient economy. So investors are thinking, well, if we have a global economic slowdown, America still will be the economy to perform better, at least in comparison to Europe. And that's strengthening the dollar, and it's weakening the euro. And something else is going on. The typical hedge against a global economic slowdown is US Treasuries. The Treasury Department in Washington just reported that the inflows of foreign capital into US Treasuries have hit another 7-year high. So a lot of demand there for American government bonds, American Treasuries, and this too, of course, is giving the US dollar a push, which on the other hand here in Europe makes the euro weaker.
Now, the European Union has updated its list of international tax havens. Brussels says there are now 12 countries helping tax evaders conceal assets from authorities, including the Cayman Islands, which is a British overseas territory. Any relation to Brexit?
Yes, there is a relation to Brexit. You know, up until the end of January, up until the date where Britain, the United Kingdom, officially left the European Union, the Brits always opposed the inclusion of the Cayman Islands into this list of tax havens that the European Union is updating regularly. Now the Brits are gone. They have nothing more to say within the European Union, and of course the opposition against including the Cayman Islands on this list is gone as well. Also, people I talk to here are reading this decision by the European Union against the backdrop of the United Kingdom, the government of Boris Johnson, soon presenting its budget. Boris Johnson already has talked about that this will be a very exciting budget. It's expected that it will contain tax cuts for corporations, but also maybe for consumers. The European Union and the UK at the moment is negotiating its future relationship. And the EU seems to be sending the signal here, hey, the United Kingdom, of course you are free now, but you shouldn't do anything against the European Union. The European Union still is a very important market for the Brits, and they should take this into consideration.
Well, another blacklist has been updated in the United States. The U.S. is blacklisting Rosneft, the oil producer from Russia, for supporting Venezuela and its left-wing government. Now, Conrad, British Petroleum owns 20% of Rosneft. What does this mean for BP?
Well, there are people on the markets who speculate that this would be a good time for BP to get rid of this 20% stake of Rosneft. Remember, not very long ago, BP announced very ambitious targets when it comes to reducing its carbon emissions. And, well, getting rid of an investment that basically stands for high carbon emissions, you know, Rosneft, a typical Russian oil company, would be a clever step here, especially as this company, Rosneft, is in trouble with the Americans and is under scrutiny of the Americans for its business practices. Generally speaking, I have to say, this piece of news also has made a lot of people here in Europe nervous. You know, this imposing of sanctions by an American government against a Russian company. It's another example of the Americans playing world police and also following their own business interests because, well, it's of course at least rumored that the American administration is also driven by the idea of protecting or making conditions better for the American oil industry. Here in Europe, we also have companies that are threatened or torpedoed by the American administration, namely this large pipeline in the Baltic Sea that's supposed to transport Russian gas to Western Europe.
All right, Conrad, thank you for updating us on those developments. There are quite a lot of market news out there, and I'm sure we'll continue to keep an eye on those, and perhaps we'll talk more tomorrow.